12 minutes left. Stocks are up off the lows. The Russell's shaved off about a percentage point from its losses on the day. Let's go to Scott Bauer, CEO of Prosper Trading Academy. Scott, the one thing that stands out to me, possibly more than anything else here, is our dollar, our greenback, really showing a lot of strength today, continuing the momentum it's found since this late summer around that hawkish FOMC. What do you think it means if it keeps rolling?
Well, it still can't get through that everlasting resistance area. It seems like of around 93 and a half.
That's Oliver.
Right. It's pushing up against there, and I expect that it will break through. But right now, you kind of have a perfect storm. You have the Fed coming up, which everyone expects it to be hawkish, and then what you also have, and I think this is as much of the tailwind that we're seeing to the strength of the dollar, is the weakness in other areas of the world. And kind of this safe haven risk off trade, because it's not just the dollar, it's the Japanese yen, it's the Swiss franc are all strong as well, because other currencies right now are so weak. So you kind of have this perfect storm, in my opinion, for the dollar between what everybody is expecting coming out of the Fed and then what's happening, basically around the world.
So, Scott, you said that you do think it'll manage to break through that 93.5.
I do.
Recent high. I mean, that's a pretty big technical event that would end, at least by kind of my own standards, the downtrend that's been happening since April of 2020. So implications of that, where do those ripple effects show up?
I don't think anywhere quite yet, although you may start seeing some shorts run for cover, right? Because that 93.5 area has been such major resistance. So you may, like I said, see some shorts run for cover. How does that going to affect the bond market if it does break through there? Probably not a lot at the beginning here, because there's such a tug of war. There's such a push and pull between what the Fed may or may not do, or that hawkish stance, and the weak economic activity, the weak economic reports that we've been getting continually now over the last few weeks. So I'm not sure how that would affect really Treasury yields, the bond market, but I definitely see the dollar breaking through.
Now, what's interesting is it's doing it on some of our weaker than expected data. Scott, does that suggest that the data can be soft and we've still got enough for the Fed to hang a hawkish hat on if they choose to go that way?
I think it can. I think the Fed kind of made up their mind prior to the last couple weeks of weak data, and especially over the last, since the end of last week, starting with consumer confidence and what we've seen since. So I think that they kind of made up their mind. And quite frankly, I think the market has taken this in really great strides. I mean, even if we close, we've got 10, 12 minutes left in the day here. Even if we go lower and close towards the lows of the day, down 500 points in the Dow, 45, 50 points in the S&P, that's still nothing. We're still so close to the all-time highs. And if that's what we have to see here for the Fed turning hawkish, boy, the market's in a really good spot, actually. So, Scott, what's your baseline before we let you go? I mean, in your own trading and own expectations, what do you think that beginning timeline will be for withdrawing support from the Fed? I think later rather than sooner. You're going to see the talk now. I mean, they're going to possibly lay a roadmap now. I don't see anything happen till at least first quarter of next year, to be honest with you.
All right, interesting. Okay. Scott Bauer, CEO of Prosper Trading Academy. I like it, sir. Appreciate the insights, the thoughts.
Happy belated birthday.
Hey, thank you, Scott. I appreciate it. I'll see you soon here in Chicago. Overdue. Things are getting back to normal. Thank you, Scott, joining us from Prosper Trading Academy. Let's talk some tech into the